wanted to do a video talking about my first 50 trades. I'm driving, so I'm probably not going to be looking at the camera. This is a red light. I wanted to just free talk about things that I've observed for myself and things that I can do to improve and get better. Just general observations about the way I've been trading. So I have taken over 50 trades at this point from maybe around mid-March. And my goal was to take 50 trades, at least 50 trades. And when I say 50 trades, I'm saying most of them actively day trading positions, not swing. I like swing trades and they have been working out for me, but sometimes I have to have much more patience on those where it's a situation that I think this stock is going to hit a certain number, and oftentimes I feel like I end up waiting longer on swing trades because maybe I'm just not as good as analyzing those predictions or stocks as quickly as I should be, like understanding when they would hit that threshold where I believe they will move to, and it usually takes them longer than I believe they will, which I think is normal. But it seems like I'm making a really good progress just day trading, not swing trading necessarily. Don't get me wrong, I have about 6 stocks that I'm swinging on right now, and I would say a mistake that I make with my day trades sometimes is looking at certain stocks and knowing that I can swing trade them, so that if I take the L on the actual day trade, no problem, I will hold on to it because I'm aware of how certain stocks move. But that can also be detrimental because then I end up having money in the market longer than I really want to, as opposed to if I would have just day traded and took the money then and not attempted to swing, it would have probably given me better results, or just again less money tied up in the market for me waiting until that swing hits. But that's fine because every day I'm getting better, and I'll show my stats right now. I'm not risking a lot of money. My trades have been somewhere in the ballpark of making like $3 to $5 per trade, and then I'm upping it. So today I did take additional trades where I took a trade for like 15, I took a trade for like 10, I took another trade for like 3. So I ended up making like 26, 27 bucks. I'm taking such small risks, but at this point what I'm proving to myself is that I can repetitiously do this. I have been now doing this consistently where I can make $15, $20, $30, $40 a day trading. So it does take up time, but I do find it to be more interesting at this point than working a 9 to 5, because I feel like the more I scale this and figure out how to just be comfortable creating more trades with larger risk, because I can see now I've taken over 50 trades, and when I show you the success rate of the trades that I have taken, it says that I'm on like a 94% trade rate. Of course, not my swing trades because I'm holding on to them and I'm getting them in and out of the market during certain times. So with my day trades though, where I'm actually in the market and I'm striking instantaneously through the day, I have a pretty good rate, and it's about taking those risks and making them incrementally a little bit larger, like I did today. 15 to 20 bucks winning in a trade is me making it incrementally larger. And I know that might sound silly because there's people out here taking trades winning like 100K in a sitting, but I'm not ready for that level of trade volume. I'm not ready to put that much risk and commitment into one trade. I'm not sure that I ever will. I could be somebody who trades multiple times and has multiple stacks where it's not just in one trade, which of course would be the easiest. You hear people say that they only trade 3 times a week. I think that that's really interesting. They do that in a certain specific way where they're watching very specific markets, very specific tickers, and they are studying how that specific thing moves. So I can potentially do something like trade on only the S&P, and when you watch those certain tickers, you know how they move. I've been doing this with smaller stocks where it's these $1, $2, and I'm starting to get into the groove of seeing who they are, remembering the names, remembering how much money I traded, remembering where they're sitting at. And of course, that also comes with a lot of journaling. I have been journaling, and I have been journaling with chat, if you will. So taking my statistics, putting them in chat, and then making sure that I'm seeing what I did well and what could be improved, and seeing what my strategy is and understanding where I can continue to improve my strategy. And it's sticking to the rules of my strategy and then knowing when to cut losses or either not get into a trade at all. So today I took 3 different trades on RKTO because I saw it was moving and I had the time because I didn't actually work today. So I sat and just played with it on multiple occasions. And that's when I was saying I got multiple instances where I was able to take profits off of those trades. And it's consistently realizing that and recognizing that, where I have this set of stocks that I'm constantly reviewing. I have multiple at this point that I can see exactly how they move, and I know exactly where to put in my buy price and where to put in my sell price at this point for certain stocks. And I've been slowly pulling money from those specific areas, and that's really what being, I think, a profitable trader is. And it seems like this isn't this $1 million situation where I'm a multi-trillionaire trading all this insane money all the time. No, it's taking it slow and through repetition, training my pattern recognition, training my brain not to get freaked out when I enter a trade, training my entire nervous system from head to toe to not react when I jump into a trade, because I can feel the adrenaline starting to push when you're about to take a trade, and I'm getting to the point where I'm not doing that. I need to be so neutral because I know this is exactly where I'm going in and where I'm getting out at, and it's following my trade strategy where I'm not trading things that are so volatile and so expensive that I could risk a lot of money. I'm not doing that. I trade VWAP. I don't trade above VWAP. Like if I see a stock trending above it, I don't take trades on those, very rarely. I usually trade about the middle of VWAP, and around that middle line, if it starts to drop, that's usually when I will buy, because most times there's support and resistance, as they call it, I believe. And when you're seeing that resistance come down, I can see that it's just human nature when the market is hot, when there's a stock that's hot, and then on top of that, you can see the volume and then how many people are wanting to buy and sell. I don't look at things if people are like shorting stocks and things of this nature. I hear people talking about that. I don't pay attention to things like that right now. Maybe in the future I would have a better understanding of how to manipulate those things to work with your data. But I don't like to take huge cuts either. I'm not necessarily in it to chase a go to the moon situation where I'm checking stocks to see like the bottom, or it's gonna just have some sort of like news that shoots it off. I like to play in those, don't get me wrong, but I'm not somebody that feels like I need to attempt to hit it on the way up while it's completely going to the moon and then trying to get in on that. I usually get in when it's bottomed out, like not as it's rising. I generally don't do that. I try to pay attention to candles. I try to pay attention to what would also be like a trend line, but not something I'm drawing. I'm just visually assessing. If you pull it away, you can see that things are either starting to trend down or trend up. Just by the eye and looking at the chart, I feel like on certain time settings, you can see where it's starting to go down. But the market is wild. It can completely go up. I've had trades where I entered into a trade. What I like to do recently as well is time the bottom. So, and it's been working really great where I see that we're in a volatile situation with a stock, usually what I see happens is it will take like a shit for like 2 seconds. I'm usually timing when it's going to take a shit. And I'm usually putting in my buy. And I got this piece of advice from some random trader I heard online. What did he say? Put your buy-in price where you would have put your stop at, your stop loss. That is a fantastic piece of advice. It has been working for me, because what I'll do is see that it's up and then put the spike so far down that generally it spikes down, and then I'm able to regain it once it spikes back up. Because most times I feel like if there's a volatile market and it's been moving in a pretty consistent fashion where there's been no decent drops, listen, don't get me wrong, somebody could come in and just liquidate and it just drops. I've seen that happen, like I said, but most of the time it will drop. Say you have something where it's trading at like $1.35. I will put the enter at like $1.25, sometimes even less, depending on where I have seen it drop within a certain time frame. And 9 out of 10 times, don't get me wrong, does it happen every time? No, it will continue to trend upward, and then I get out of those trades. So it will drop, and usually it will hit my buy price, and then it will bounce back up. So it's like what, buying the bounce down, you buy, it bounces back up, and I will take my profits at that point when that bounce up happens. So I'm just timing now to where I'm getting larger bounce ups. Now, don't get me wrong, would I love to nail one before it's even up? Like if it's trending this and then I see some volatility or I see news and I would like get in and let it shoot. Yeah, I would love to trade like that every single day, no problem. But that's not usually what happens for me. I'm not that good yet with scanning. I scan decently with the tools that I have, but I don't have like a raw camera and scanner setup, which I would like to do in the future. But I'm looking at volatility within stocks rising. So I will see the percent market change. If it's getting to like 16, 17, like I see it rising, that's one indicator that I would like that trade. Another indicator would be the volume, making sure that there's lots of trading happening on it, that it's staying above a certain limit, that it's trading very quickly, and that it's trending upward trading, not those, because I've also gotten into trades where I'm not paying attention to the market change ends up being like negative. So it's volatile but not trending upward, and the market change ends up being against what I'm trying to trade for. And there's been so many trades that I've looked at that I've almost traded and then backed out because it wasn't following my rules. It kept trending or trading way above VWAP, and I don't like to do that unless I'm certain about the trade that I'm going to make. I like to stay within that specific band. When it starts ripping in and out of the bands, I don't personally like that very much. So I usually walk away from those trades. There's a lot of money to be had in those trades due to the volatility. If you're willing to take a trade and you don't care if it's at the top line of the VWAP and you see that it could potentially skyrocket and do something for you, generally speaking, it barely spikes above that, and usually it will drop back down to below the middle and or the bottom, depending on how it trends. Of course, if the stock is trending upward, it's going to keep going, and the lines will move, and and I would trade accordingly. But I generally will not take trades where it's trending far above the VWAP. I generally just don't do it. I don't know why. It's just, I feel like for some reason there's too much volatility in that area, and if I'm taking trades above that line, doesn't continue to project upward, that's where you get into a lot of loss. And I've done that, and that's a lesson that I've learned. I've done that on multiple stocks now where I'm holding them. I'm probably about $400 where I'm in the red technically on swings right now, but I know they're going to turn around. And because of the fact that I've been day trading against that, I'm only down like $200. So I'm taking that $200 in the market waving around at me as just real time teaching future. It is a real-time example of me getting experience, because think about it, I could easily be dumping money into like a coach or something, and I probably may do that at one point, or like a mentor or something. But for now, the way I'm reading it, the market is my mentor. I know where I made the mistakes. I know where I entered in trades way above the VWAP line because they were trending in news, and that's when your body starts to get crazy. And I took trades thinking they were going to continue to trend upward, and they didn't. They actually dropped downward. So I have a couple of trades that did happen to me on, but technically they were ones that were those swing trades where I consider holding on to them until they pop again, which I believe every single one of the trades that I'm holding will be profitable. I believe that they all will pop. And on top of that, the risk that I have for each and every one of those trades is not an insane level of risk. Like each trade, I'm playing with like $200 or $300 within each trade. Now, if every single one of them like just took a shit and bottomed out for some reason, I would probably lose like $1,500 or something like that. But that, I know, especially with a lot of this stuff, like it's not going to happen. As far as I'm concerned, some of them might go high to where I can make a really sickening profit, but it's patience, and it's putting your number to the right strike price as well, because what ends up happening is that I've noticed you can get greedy, and you literally, especially if you're swinging on certain trades where you believe that they should hit a certain line due to whatever the trends, whatever you're testing, etc. If you set it, good till canceled, and you're way greedy with it, and you look back through the timeline, there could have been multiple occasions where you could have took profits for like not that much less, and you would have been all right, done with the trade and profitable and moving on to the next trade. Because you set your price so high, it continues to flow and you never get rid of the stock. And I've done that too, and I've learned my lesson to where I've offboarded multiple stocks profitably, but at lower prices, instead of sitting and waiting until it hit the price that I really wanted it to. Because that way, sometimes, instead of just sitting with my money in the market like that, I can use it towards another trade. And that's just kind of how I think about it. That's my thoughts on my last 50 or so trades. I hope you enjoyed it. I hope you learned something. I hope that it might help you with your trading journey, that you can relate to somebody who's brand new. I've only been doing this for about a year now, like trading, and then I have been investing for years and years. However, I've not been investing like I should have been. Within the last 5 to 6 years, I've been hyper focused on my finances and getting them to the point where I can declare myself finally financially free. So, and I would love that for the rest of you. I would love everybody that watches this video to experience what it feels like to be financially free, and in the pursuit of that, enjoying what you do. So I hope everybody enjoyed this video, and until the next time, guys, happy trading.